Hey everyone, I'm Chris.
I'm Isaiah, and this is the Aos-to-Aos podcast. Hey everybody, welcome back to the Aos-to-Aos podcast. So we have a different format here. We're doing it over Skype and kind of recording over the computer due to not only everything that's been happening lately, but also because, I'll be moving to a different town and we won't be able to be together as much. So this will be the format for a little bit. It might be a little glitchy, I don't know, depending on, what happens, but we should be able to figure it out, and then hopefully we can work through those. But anyway, today's video we are talking about different types of real estate investing. We have all these different types like rental properties, industrial, retail, things like that, and it gets kind of confusing. And then we just wanted to make a video kind of describing different kinds and hopefully bring into light the different kinds so that maybe you can make a decision on what kind of real estate investing is the best for you.
Yeah, because it gets kind of confusing. I mean, like everyone talks about real estate investing, but what are they really talking about? Are they, talking about, buying a house and renting it out? Something that a lot of people don't think about is that, there's different kinds. You can have commercial real estate. You can, be buying houses to flip them, things like that. So in today's show, we'll kind of go over the different kinds and kind of discuss what they are. So.
Right, yeah. So the first point we have here is rental property investing. So this is residential rental property investing. We'll get into kind of commercial later, but this is just rental property such as multifamily, single family, and things like that. This is my favorite kind of investing because it's one of the most passive ways, but it also gets you the most income on top of the most passive ways. So you can have things like cash flow, you can get tax deductions, you can have the loan pay down, which is one of the biggest things unless you pay cash, of course, and then also appreciation. And that's one of the biggest things because things like houses, buying and flipping houses or renting houses, you can do forced appreciation where you add things on, maybe another bedroom, or you just fix it up a little bit, and you can actually add value to the house and have more equity in the property almost immediately. And then when you rent it out to somebody, you can have cash flow coming from that. And there's a lot of formulas around this, like what your cash flow would be, but basically you would take all your expenses, or you would take the amount that the tenant's paying you, take all your expenses, subtract from that, and then everything that you get after that would be your cash flow. And you want to make sure to include property taxes, insurance, the mortgage, of course, unless you're paying cash, and then any other expense, such as you want to put some aside for property management, even if you're managing the property yourself, just because one day you might want to have the property managed and you want to budget for that. And then you also want to add expenses such as if you break a toilet, things like that. There's a lot of really cool things too that you can do with this, such as house hacking. House hacking is really cool because you can actually buy a duplex, triplex, fourplex, things like that, and you can rent out the other units and live in one of the units yourself. This is really cool because it gives you a free place to live. Also, you have a little bit of cash flow coming in, so you basically you're living in your job. One really cool thing about this is you can get a loan basically the same as if you were buying a house to live in. So if you're buying a rental property, you're going to get a higher interest rate, and you're going to be paying more for a rental property just because of the fact that there's more risk around it. But if you pay for a house that you're going to live in and rent out the other side to, you would pay a less interest rate, which is better for your overall ROI. Mm-hmm. Types of rental properties are, like I said, single family, multifamily. Multifamily can be anywhere from a duplex to a large multi-unit apartment complex, things like that. And there's a lot of different things you can do. Later on, we'll get to multi-use and things like that, which is you can use them for different things, but we'll get to that in a minute. And then a lot of people ask, one of the biggest things around rental properties is, should you have an LLC or should you not have an LLC? Should you just invest by yourself? This is one thing that's really specific to your situation. So if you have a triplex and you're living in one of the units, you don't want an LLC. I mean, it doesn't really matter if you have an LLC, because the purpose of an LLC is to protect you personally if you were to be sued by one of the tenants and things like that. So if you're living in the triplex already, and if you own that triplex with an LLC, if you get sued, your primary residence is taken away anyway. Or if you don't have an LLC, if you're personally sued, your primary residence is taken away anyway. So you shouldn't really worry about that too much. But if you own a ton of apartment complexes and you own your own residence, it's probably safer to get an LLC, but you want to talk with your lawyer and things like that. Just because it will protect you if you do it properly from the judge permeating the LLC and taking your primary residence or garnishing your wages and things like that. Also, any other companies that you might own and things like that. So, and then just one more thing I wanted to touch on before we move on to the next point here is compound interest. Compound interest is one of the most fun things about investing in general, not just real estate investing and definitely not just rental property investing. But what compound interest means is you invest in any kind of investment, but in this specific case, we're talking about rental properties. And then you use that money to buy more rental properties, which then buys more rental properties and so on and so forth. And you can just keep going on. So where your investments buy more investments and more investments, and you just keep growing until you're at a point where you can just buy as much as you want, basically. And then, of course, you can take that at some point and move it on to any kind of expenses you want. If you want a nice car, compound interest is a cool way to get that car because your investments buy investments buy investments buy expenses. So that's a really cool way to do that.
Absolutely. Our next subject we're going to talk about is actually business rentals, commercial rentals. So, that would be something like in a strip mall, maybe even a house converted with maybe a little bit of, commercial space down below. It's a good investment, but at the same time, there are a lot of caveats, a lot of things that you have to watch out for. One of the big risks is having tenancy. Sometimes, you're not going to have that place rented all the time, so you actually have to count in your rate of vacancy. So this goes back to kind of, setting aside part of your money. So, you might have that place rented out at $1,000 a month, but you're only going to rent that thing for, 8 months out of the year. So when you look at that, you need to look at that is, okay, 12 months, $8,000, and that's going to be how you work out your profit on it. So those are some of the things to consider with commercial real estate. Also, it's more volatile. With businesses, especially small businesses, when you're starting out, you're not going to have the prime space where a large company is going to rent from you, a stable company is going to rent from you. You're probably going to be renting, first of all, to small businesses that are startups and mom and pop operations, which have a higher risk of actually going bankrupt or going under kind of thing, or maybe they're going to just have a slow period getting started. They're not going to be able to pay their rent and stuff. So those are all those things that you need to consider with commercial rentals is the risk and the volatility and the rate of tenancy. So I don't know. There's not a whole lot that I can really say about it. The other thing is, of course, with commercial rentals, you're probably going to have to move from an LLC up to like a S corp or something like that, an actual corporation, just to remove yourself a little bit more from the liability. And especially when you're dealing business to business, you might want to consider doing that instead. So.
Yeah, it's a great way to protect yourself so that they don't take your personal wealth and things like that. So one of the next things that we had here, it was house flipping. This is another really cool one. I personally don't want to partake in this one just because it's less passive. I'm looking for a more passive thing. You have to be active in this profession to be not necessarily good at it, but to make a return on your investment. So if you need to be constantly finding deals and then constantly finding contractors to fix up the properties and then constantly selling. So that's not as passive. You have to work in order to get paid in this business. It has a high ROI in a short-term period, though. So if you're willing to do the work up front, you should be fine because it has a high ROI. For example, you could buy a house for $100,000, add a lot of amenities to it, and fix it up, and then you can sell it for $200,000, and you made double your money, and you can go ahead and use that compound interest to buy more and more investments, like we talked about with rental property investments. So there's a high ROI in a short period of time, which is really cool about that. but again, you have to be active to get that ROI. So that's one of the things holding you back in this specific scenario.
I agree. I mean, house flipping, you really have to be involved quite a bit, but at the same time, for some people, that's what they want. Some people want to be involved in it. So, I mean, for that person that wants to be involved and, feel that sense of accomplishment, somebody who likes to, is a big picture kind of person, likes to take something from start to finish. That's a great investment for people like that. So I don't know. Sure. I guess it depends on who you are and what you want and what you're excited about. So I definitely wouldn't discount it. We kind of touched on the next subject in the first part I talked about, and that's mixed use. Mixed use would be something where you would have a mixture of, say, residential and commercial property. So that would be maybe a commercial building that had businesses downstairs and then apartments upstairs. That would be kind of qualify as a mixed use. And the great thing about this is that generally residential is going to be a lot more stable. So, especially in a downtown sector where, people are going to rent an apartment to be closer to work. So, it gives you a little bit more stability in your investment. You can rent those apartments out. Those are going to be on, say, a 12-month lease, and generally people pay their rent. So there's a lot less risk in that part of it, and that kind of mitigates your risk when it comes to the commercial part of it. So, even if your shop stays empty, you still have income coming in from the apartments upstairs. So that's a really good advantage of a mixed use. Another example that we have here of a mixed use would be, say, factory and manufacturing. And also like storage and things like that, where you would have, say, the storage part of it, which, again, would be a monthly rental. People generally are going to pay that because they don't want to lose their stuff. That, again, mitigates your risk for something like the manufacturing part of it. So, manufacturing is generally a pretty stable business, but again, as you're starting out and you're dealing with, companies that are just starting out or startups, there is a lot more risk involved there. So, in a lot of ways, the mixed use is a really good mixture for someone starting out. So, anyway.
For sure, yeah. And I mean, working off what you said about resident or industrial real estate, that's basically like factories, manufacturing, things like that, industrial real estate. And so kind of working off what you said there, it's a pretty safe business and things like that. One thing that you would probably want, though, is an LLC or an incorporation, because you probably wouldn't want that risk coming back on you, just because it is a dangerous business to be in, manufacturing, things like that. So you wouldn't really want to have that ownership on yourself unless you're willing to do that. But just know that if you get sued, they can permeate your wages and your personal life and things like that. So another thing cool about industrial real estate, so we have mixed use stuff, which is basically just any building that you could use in mixed use, but industrial real estate is usually not very pretty. It's kind of like an uglier building and things like that, and usually empty, like you don't need 4 bedrooms or whatever, so it's usually less expensive overall. You can pay less price because there's like less parking. Usually they'll just park wherever, it's just a big building on the outskirts of town, so you might pay less, and then you might have a better return on investment because of that. But that's basically the points I had on that. So
okay, well, the next and final point that we were going to talk about was retail. So on one side you have the manufacturing, where you don't have to be very pretty. You don't have to have a very nice building. I mean, it's going to be used for some pretty heavy stuff. Well, when in retail, you actually have to have something that is either presentable or something that can be pretty easily made presentable. You want something that's going to be so when the public sees it, they're going to want to go to shop there. So this is actually probably one of the more expensive types of investing, because retail is going to include things like shopping malls, again, strip malls, standalone buildings, but they're going to have to look nice. They're going to have probably big windows in the front, lots of visibility for whatever they're retailing. They're going to want people on the outside to be able to see what's going on the inside, and they're also going to want people when they come inside to feel comfortable and feel like they're buying from a legitimate business. So that's going to be one of the more expensive forms of investing in real estate, because they're gonna have to have a really good starting point. So, this might not be something for people starting out. This is probably going to be something for people who have a little bit of capital behind them, that have maybe been in the investing business for a while. Obviously, like if you have the right motivation and the right capital to start with, this might be a good investment for you, because of course, with retail, the price per square foot that you can rent your property out for is actually going to be quite a bit higher. So your returns are going to be a little bit higher, but again, your risk is going to be higher as well, because with retail, like anything else, trends change, and if the business isn't keeping up with the trends, they're going to be falling behind and probably going to lose business. So just something to consider with there. Yeah,
and another thing too about that is, you want to be competitive. So location is really important with retail, but also you want to be competitive. If you think about if a McDonald's is going to move into town, who are they going to choose? The person who has a good location, but is so expensive, or is it going to be the person with a good location who's less expensive? Like, they're all about that bottom line. So you want to make sure to be competitive in this kind of scenario, because you're not just talking about renters that just want to have a place to live. You're talking about businesses who just want to make money. You know what I'm saying? So their biggest goal is to make money, and they spend millions of dollars a year figuring out how to cut their profits by a little bit. So you just want to make sure to be as competitive as possible in this scenario.
Yeah, absolutely. Well, I guess that'll wrap things up for today. Hope you guys like the new format, and hope you guys enjoyed the content today. We'll try and kind of expand on some more business ideas in future our podcasts, and make sure to mention down in the comments if there's something that you'd like us to talk about.
Yeah, and also another thing to mention is that we're kind of shortening the podcast a little bit. We just want to have a little bit better interaction. I think in the future we might do longer podcasts, but like you said, I hope that you guys enjoyed the video. Go ahead and leave a comment down below if you want us to talk about anything. Go ahead and hit the subscribe button if you liked it, and then leave a like on the video. That really helps us out.
Make sure to hit that bell icon so that you're notified when the new videos are uploaded. See you next time.
Have a good day.